Hello, everybody. This is Toni Turner, and welcome to the market now as of Friday, June 9th at about 3:45 p.m. Eastern. Well, the S&P 500 and NASDAQ hit fresh 2023 highs today as a jump in Tesla and technology stocks in general outweighed jitters around the Federal Reserve's policy outcome and inflation data next week. Tesla climbed 4.9% and was set for its longest winning streak since January 2021 after General Motors agreed to use the company's supercharger network. GM shares rose 2.5%. And on that cheerful news, let's go on to three charts that could give us some insight into the week to come. First of all, you know we always look at a daily chart of the S&P 500 spider, symbol SPY. The SPY is the exchange-traded fund that closely follows our benchmark S&P 500 index. Now, today when I captured this chart a few minutes before the close, the SPY was trading at $430.08, or about $4,300 on the S&P 500 itself. Now, the next thought in my head when I saw this was, when was the all-time high? The all-time high was in January of 2022 at $479.98. You can call that $480 if you want. So we're only about 50 points from that all-time high. The SPY gapped open this morning. It gapped open at the open, obviously, to $429.96. Moved up to a high of $431.99, then came actually back to the opening price again, just a few cents. So now we're at near the close here at 430, so about where we gapped up to at the open. Traders are hoping that the market's happy mood is because the Fed might skip raising interest rates at its meeting next week. Of course, we don't know that that's fact. We just know that it's a hope. We know that we know that the SPY made a higher low in March at about 380, certainly higher than the December lows at 376. So that's a good thing, we talk about a lot in here. Higher lows are always a good thing because it means the buyers jumped in before the asset came down to its prior lows. So that was a good thing. So it returned back up here after this March low. It moved back up through the 200-day moving average, the black line, through the 20-day moving average, the red line, and then right up to the 50-day moving average, rose right through that, rose back up to its February. Here's the February highs. It rose back up to its February highs, then sailed right through those, to wait out the debt negotiations, which was, of course, a pain in the neck for about 2 weeks. Finally, those negotiations were satisfied, and all that time when it was coming up, the SPY walked along the 20-day, dipped down to the 50-day, but managed to stay up. And as we got closer and closer to the end of those negotiations, you can see that positivity or buyers were coming into the SPY. And then on that day, it was announced that the debt negotiations had come to a close. So we jumped up, finally got over that 420 line where we'd been, it seems, for darned ever with that resistance, popped up here to consolidate at 426 to 429. So we're up here, 426, 429, consolidating. I said gapped up today, but came back down to the open at the close. So what we have here now is the SPY is trading at a bit of a higher premium to its 20-day and 50-day moving averages. If we look down at the 14-day RSI that we watch quite a bit here, we can see that it's almost up to the 70 line. If it goes over the 70 line, that it means that this asset is overbought. Right now, the RSI is at 66.79. We can call it 67. So it'll be interesting to see if the SPY can continue this breakout, because it definitely has broken out here, can it continue it going into Fed week, and can it use 426 down here as support? The next level down, of course, is we have 422. We have 423 in there. We have the 20-day moving average coming in at 419. We have the 50-day moving average coming in here at 414 and change. And then we're down here to 405. We have those lows. So quite a bit of support, potential support opportunities here should the SPY need it. So it feels good, doesn't it, to have some positive footing now? So let's be sure to guard our profits with protective stops. Our next chart today is a daily chart of the QQQ, symbol QQQ. This is the ETF that closely follows our NASDAQ 100 index, and in it we have the top non-financial companies by market capitalization in the NASDAQ, like Alphabet, Amazon, NVIDIA, AMD, and Tesla. Now, when I captured this chart today, the QQQ was trading at $354.65. We know that ever since it fell to the March lows at 285, it came off December lows nicely here and rallied up to the February highs, but then it fell back down to March lows at 285, then moved back up. This was about 313, so the QQQ off those March lows moved up back through its 200-day, back through its 50-day, back through its 20-day, moved up in a very nice rally here, back up to its February highs at 313, then ripped right through those and got up to 320, 321 level right here, then went sideways for a bit, sat and composed itself a little bit, quick 2-day dip, and then started walking right back up the 20-day moving average. And even though we had the debt negotiations, which was just quite a long, it seemed like a very long-term event. Even though we had the debt ceiling negotiations going on, the NASDAQ was able to keep climbing. It was just saying we don't care about that. And it just popped up to a high at 357, and that was on June 5th, which was this past week. It was Monday, June 5th. So it's been consolidating a bit on these levels to where we are today, again at 354.65. Now, of course, we've been watching the 14-day RSI here and talking about it quite a bit, talking about the fact that it is overbought, that it has popped, the RSI line has popped over the 70 line, saying, hey, the QQQ is definitely overbought here. It came back in after a few days up. It came back in on the Wednesday of this past week, but it didn't break this mighty trend here. However, when things get this steep, you got to say that you just need to be a little bit careful here, because we usually see things shorten, or I should say soften a bit in the short term. So it's going to be interesting to see what the QQQ does in the coming week after the strong gains of big cap tech meet up with the FOMC meeting, the rate decision on June the 14th. Our third chart today is a chart of the daily chart of the iShares self-driving EV and tech ETF, the iDRV. I'm just going to call it, for our sake here, the iDrive. That'll make life easier for all of us. Self-driving electrical vehicles, of course. It has 59 holdings in it. The top holdings are Li Auto, Tesla. It's one way to own Tesla without the volatility. Samsung, ABB Limited. And as I said, 59 holdings. When I captured this chart today, the iDrive was trading at $38.56. Now, let's look left on the chart here. Since the October low, we know everybody had an October low. Since the October 2022 low at $31.86, it has been quite a ride for this ETF. since it rallied down, or I'm sorry, since it had its low here at 31.86, it rallied into November and December highs up at 40. Then it dipped to its December low down here at 32.85. Then it rode in January really fast up to its January, through January, back up over the 20-day, up over the 50-day, back up over the 200-day, and came up to its February high up here at $43.65. Now, when you see a candle like this, it typically means when you see it open at what turns out to be the low, open at the low, go up on the day, and then come back down, that's a candle pattern that you can kind of guess that it may turn out to be a down day the next day. Not always, but many, many times. So the iDrive made that high in February at 43.65, then fell down here to about 35 in March, then back up to about 38, then back down gradually back down in April to test that 35 low again. So it came back and tested the low, but it didn't go below it. It held this low at about $35. So that's cool. Now, finally, from there, from that 35 low, it's moved up, kind of negotiating its way back up through, riding up back through the 20-day, the 50-day, the 200-day moving average, back up to a little over 38, then scooched down a little bit, and is now broken out. And I drew these trend lines here. You can see this one. I don't know if I can do it that straight again. And I drove this one, and you can see where the iDrive here is actually, at the moment anyway, breaking out of this triangle that I drew. It is now over. All three moving averages are coming in right here at very close to the same point, right about at $37 and change either way. So you've got the 20-day, the 50-day, and the 200 all coming in here right around $37 and change. So that's a good deal of potential support for the iDrive. So in the coming week, if the iDrive can stay above the 50-day moving average, I'm going to pick that one because the 50-day right now is 37.08. If you'd prefer to make it 37, that's fine. So if the iDrive can stay above 37 in the coming week and the market remains fairly positive, and do keep that Fed day in mind. Everybody would like to think the Fed won't raise rates, but there aren't any guarantees. So keep that in mind. So if it can stay above the 50-day moving average, we'll call it 37. And if the market remains fairly positive, of course, if the Fed doesn't cut rates, I will interject, then of course that's a positive thing. Anyway, I may add a small position of the iDrive to my trading portfolio with a relatively tight stop here at $36.25, okay? $36.25, which is right down here under the 50-day moving average. When and if the iDrive is able to ride up to $40.50, if it's able to rise up here, I will add to my position, and of course by then I will have a trailing stop. So you may want to keep an eye on the iDrive. Now, if you'd like to become a more successful trader, this is the perfect time to check out my online training programs. You can choose from 10 different programs, like our popular flagship product, 7 Steps to Successful Trading. Plus, if you like to learn how to swing trade, we have that right here. Learn how to trend trade, bottom fish, and much, much more. How to read charts is great for novices, and 3 winning setups is great for short-term traders. You will find out how to elevate your trading skill set in these programs and increase your gains quickly and easily. To see all of my online training courses, simply go to this link on this screen, or easier still, just click on the orange button below. Until next week, be careful out there. Keep green on your screen. I'm Toni Turner, and this is The Market Now.